Hi guys, and welcome to ECOMINDSETS video of the day. In this video, I will speak on the beginner's knowledge on what a pip is. But before we move on, don't forget to subscribe to the channel if you are new. And also press the bell notification button to stay notified anytime we release new videos. Now let's take a look at a pip. A pip is the unit of measurement to express the change in price between two currencies. Just as a pip in fruits is the smallest part of the fruit, in Forex, a pip is the smallest price unit related to a currency. It is the basic unit of measurement or value when a currency pair moves. The term pip is an acronym for percentage in point. For example, if the EUR/USD moves from 1.2722 to 1.2723, then the 0.0001 rises in value a 1 pip. The major currency pairs go to the fourth decimal place to quantify pip, in the exception of the Japanese yen, which only goes to 2 decimal places. Example, GBP, USD 1.2431. AUD, EUR 0.8823. CHF, CAD 0.9432. USD, JPY 97.71. Most brokers only quote the fourth and second decimal places for these pairs, while some other brokers quote the fifth decimal place of the currencies. The fifth decimal place is referred to as pipette, thus, 1/10 of a pip. How to calculate the pip? The calculation is quite simple. Multiply your position size by 0.0001, thus 1 pip movement equals position size times 0.0001. Example, to open a position size of 10,000 units, calculation to determine our 1 pip movement will be 10,000 units times 0.0001 equals $1 per pip. Hence, anytime the pair moves 0.0001 for 10,000 units, we will lose or gain $1 per pip. Thank you for watching this video. Look out for our next video. Check out some great brokers who offer currency trading in the description below.